Hello traders, Gary Wagner here. Approximately 1:20 in Honolulu, 7:20 in New York on Wednesday, 4th day of August 2021, and this is the daily report for gold and silver. ADP Jobs report came in today well below expectations, with expectations above 600,000 and the actual numbers coming in just at around 330,000. While typically the ADP report isn't a good projection of what we can expect to see in the Labor Department's report due out on Friday. And of course, that is the report that the Federal Reserve looks at closely to determine their monetary policy. Over this last year, there's been a much higher correlation than in previous years. If that holds true this month, we could see those numbers come in well under expectation, and that would force the hand of the Federal Reserve to maintain its accommodative and dovish stance for longer than they had anticipated. We'll talk about that during our opening letter. We'll look at support and resistance levels on the video report itself, which begins now. Immediately following the release of today's ADP private sector jobs report, we saw gold run to an intraday high of $1,835.90 before giving up almost all of those gains except for 20 cents, which is the current gain on the day, with December gold futures fixed at $1,814.30. Although gold prices closed in essence unchanged, gaining 20 cents on the day, that occurred concurrently with some dollar strength. U.S. dollar index gaining about 17 points, 0.18%, and is currently fixed at 92.255. While we can look at a multitude of technical indicators, the key is going to be the numbers that occur on Friday's U.S. Labor Department's jobs report. If they come in well under expectation, that would signal to the Fed that the recovery that they were looking for is slower than they anticipated, and that would mold or shape when they were going to begin to taper, as well as raise interest rates. Right now, the expectations, or their dot plot, is conveying that they do not expect an interest raise hike until 2023. In 2023, they anticipate 2 hikes. However, up until then, we've got the next year and a half in which we will see interest rates vis-a-vis the Fed's funds rate continue to be between 0 and 0.25%. So that any type of trend line that we draw to indicate that we're seeing solid support is either going to be supported or denied by the numbers that come out on Friday. We have maintained a price point well above this particular trend line that is just created from a series of lows that occurred in the marketplace and extending that forward. As I said, at the same time, it is all about the numbers and not so much the technical indicators as we look forward to Friday's release of the U.S. jobs report for the month of July. Although many analysts believe that the ADP numbers released always 2 days prior to the U.S. jobs report is not a solid indicator with a high correlation to the U.S. Labor Department's reports, at least this year, those numbers have had a stronger correlation than those in the past. Now, this ADP report came in well under expectation, with the anticipation of well over 600,000 jobs being added to the private sector. And that is partially where the forecast of an additional 850,000 jobs is coming from forecast for Friday's report. However, with the dismal numbers that we got in the ADP report, and realize the major differential between those reports is that ADP does not account for government jobs that were added. However, with the ADP report coming in 300,000 jobs under the initial forecast, we find it hard to see that the U.S. Labor Department's report on Friday will come in close to expectations. If that is the case, that would be extremely bullish for gold, because it would cause the Federal Reserve to extend its accommodative monetary policy a little bit longer than was anticipated in statements made during last month's FOMC meeting. Therefore, traders, our recommendation is to maintain our current long position in gold and to maintain your current stop. Silver sustained a price decrease of over 0.6%, drawing down by about 16 cents, with September futures currently fixed at $25.42. When we look at today's trading activity in silver, it is quite easy to see that the level of 50% in terms of a retracement area is still strong resistance for silver, with that matching precisely to the high achieved in trading today. No major chart damage in terms of bearish market sentiment occurred because we still see solid price support for silver at $25 to $25.11 based upon the 61.8% Fibonacci retracement. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.